Nice.
Yeah.
So kind of started there, moved into the Orlando area, opening up a lot of business. So what was that forcing function or that pivotal moment that kind of said, hey, maybe I need to look at real estate a little bit deeper?
Yeah, so I was always interested in real estate, always wanted to do it, but the same as a lot of people are, I was terrified of toilets, tenants, and trash. I just didn't want to do it. I thought doing the single family was basically like getting another job. And, I kept thinking, well, every time I have somebody come and work on my house, I get ripped off. And why do I want to make that a business? And so for the longest time, I thought about real estate. And then actually when I started with iFly, they gave us all a copy of Rich Dad, Poor Dad. And I read that book and I went, wow, okay, I got to do something about real estate. But again, I did with so many people. Okay, well, I understand a little more, but I don't have time. I don't have money. I'm just going to keep doing what I'm going to do. Then what happened was iFly Indoor Skydiving got bought out by a private equity company. So I decided that, okay, now I got some money. I've got no excuse, right? So I still have no time because I'm still working 78 hours a week, but I've got some money. So then I started researching about real estate investing. And then all of a sudden I went to a couple of weekend seminars and a few things. And then all of a sudden I found out about multifamily syndication. And the light bulb just came on in my head. I went, wait a minute, I understand this business model because it's very similar to what I was doing before, where I was doing a new business. And so, I understood. So you buy a business, it has a real asset or hard asset. So the apartment complex, you put some capital expenditure into the business, you do a bunch of things, and then you improve the quality of it. And the business starts to grow and become more valuable. And just that whole light bulb. And that happened a lot. Like in iFly, we took over some franchise locations. So it was very similar. They were run by independent operators, didn't have a lot of systems and sophistication. So we went in and we would buy it. We would do the exact same thing. We would add some capital expenditure. We would add some systems, put some things in play, and increase the operating profit. So the light bulb just came on. And I think the thing that turned me the most over to it was when I did get my big payday, I paid a ton of taxes. And I knew at some point real estate investing was super powerful for the most efficient way to earn income on taxes. So already too late, I'd already paid them. There was nothing I could do, but I started passively investing. And since then, I've passively invested in 20 syndications. And I switched later to be a sponsor, and I'm on 2 deals as a general partner. 6 of my deals have gone full cycle, and I've invested a little bit more than just multifamily. So I have a retail, I have a medical center, single family home fund, and a new build storage. So I became very diversified. But I'll tell you, I wish I had started earlier, right? So the one point I make every time I do a talk or talk to anybody is don't wait to buy real estate and wait. Real estate is an appreciation game, right? Your real estate gets more valuable over time. But then if you think about it, you add that steroid or whatever you want to call it of forced appreciation, where you take the business because it sells for a multiple of its earnings. And so if you can grow the earnings, it sells for a multiple of that. And so that whole light bulb came on and I went, wow, this is just absolutely amazing. And before I didn't understand it, I just really didn't understand, like, how can I trust people? How can I do this? And I've actually got a really good analogy, if you're okay if I share it, on what it means to be a passive investor.
For sure.
So picture this. Okay, so I'm going to go on a journey. Okay, so tonight we're talking about your financial independence journey, but let's talk about, we're going to go on an airplane. We're going to go on a trip somewhere. We're going to go on a journey. And so am I going to become a pilot and buy a plane and fly it myself? Am I going to become a mechanic or do whatever? So if you think about it as a passive investor, you're buying a ticket on a journey through financial independence. So think of it buying a ticket on an airplane. So somebody owns the airplane, somebody owns the airport, somebody does this, somebody does that. You don't have to know all those functions. You just have to put your money into it, go on your journey. So if you think about it, the syndication group, they're the airline, right? They're the one who does it. Okay, then you have the asset manager within the property. So the asset manager is the pilot, right? He's the one that's leading the whole thing. He's ultimately responsible for what happens. Then you have the maintenance crew, the ground crew, the things. They're the property management company. They're the ones that make sure the airplane's tires got, the engines are going good, fill it with fuel, make sure everything is well maintained. Then when you get on the plane, you have the flight attendants. Okay, so the flight attendants are your investor relations. They're the one that get you on the plane, make sure you get in your seat, you put your seatbelt on, and it's very much so when you're on the plane, you can do whatever you want. So you could be working, so you can still keep your job. You could be on your way to retirement. You could be sending your kids to college. You could be whatever you want to do on your journey. And then while you're on your journey, they keep giving you updates, right? So the pilot comes on and goes, oh, interest rates are going up. Well, we have turbulence. So we got some things happening, but this is what we're going to do. Here's our plan. Here's the steps that we've taken. And that's just a really good way for people to look at that journey. And then when it arrives, okay, the journey is over. And as a passive investor, you've invested in that deal. You get your share of the equity of that deal when the deal sells. So it's a really good way to kind of think it through that, you know, if you think about it, right? So I'm now starting to be an asset manager on some properties. So I've been investing, I've been doing some training, and I'll tell you what, it's a lot of hard work. Being a passive investor is a lot easier. And so you want to make sure, but that it just helped me get through. So as I started thinking it, because it's very hard to wrap your head around.
No, I think that's a phenomenal analogy that every part of that journey on an aircraft, the parallels are right there. As you're going through life and you're aligning with a syndicator that you're essentially, just like with the airlines, you're putting your life in their hands, essentially. When you're putting your hard-earned money in these deals.
And it's very important to who, right? I've simplified it, right? Because airlines are regulated and things, and syndications have some regulations. But at the end of the day, the most important factor in passive investing is who you give your money to, right? We talk about that you want to know, like, and trust them. But it's even a little more than that, that you want to make sure that they're providing value, they're providing education. You feel like you've got a relationship with them where you've connected with them and, you know, they have shared values, right? One of the things that was most empowering to me was that we're actually improving communities, making people's lives better. So like the first time I was involved in a deal, you know, they started showing us how they put new lighting in the property. They fixed up the parking lot. They got some pool furniture. They put in a playground for the children. They put in a pergola and a barbecue. And I've got friends that just like, they've got different programs. So for example, they got a back to school program. So any child that stays in their complex gets a free back to school backpack full of all the supplies that they would need. It's amazing. And they go through different charity organizations and do it. They did turkeys at Thanksgiving. You know, there's one that's in a neighborhood where most of the people are not English speaking. And so they did an after school program. They actually got connected with the church group and they did English as a second language tutoring for children and tried to make it fun. So think of all of those things, right? It's like, you don't think of that when you just think, I mean, you don't think of all those good things that happen that you're empowering when you're investing in a multifamily real estate deal.
No, most definitely. You're definitely impacting the community and you're providing a service. And a lot of people don't realize that, you know, your residents, they're your lifeblood of your business, you know, when it comes to multifamily.
Yeah.
So much to unpack there. I'm gonna take you back to iFly. So how was the culture there that they were giving out Rich Dad, Poor Dad books to the employees?
Yeah,
That
so the original owner of iFly was a serial entrepreneur,
okay.
and he believed that you should not depend on one's sole income, right? So I don't know if ever, Warren Buffett says, until you figure out a way to make money while you sleep, you will work until you die. And he was, even though all these people worked for him, he said, I want you to figure out a way for you to, and he was big into savings. There's a lot of people that are big into savings and talk about that. I'm not so much big into savings as I am investing and growing your wealth, but he wanted to talk about that. So he did a lot of things to try to help people figure out how to create some income. And it's super powerful to be able to do that, obviously.
No, most definitely. I think that's something, especially with our REI Genius community. I think most people here get it. The need for passive income, multiple streams of income, where you're not, like you said, working until you die, as Warren Buffett put it,
And then
because you're not
one
making
other
money
thing
to
I want
sleep.
to talk about too, the power of real estate and the power of passive investing. There's another thing that a lot of people don't really think about. And I didn't start passively investing till I was 55. I know I look younger than that, but I'm just kidding. I didn't start till I was much later in life. And I want to talk to people about something. So, and I'm going to talk about a larger number just because it makes the math easier, makes it more exciting. Okay. So you're 25 years old and somehow you've gotten something, right? You've managed now to get a big commission check or whatever, and you have $100,000 to put in a real estate deal as a passive investor. So you're still going to work, you're still doing everything that you're going to do. So think about this. A typical real estate syndication doubles your money every 5 years. Okay, so 25 years old, you put $100,000. 5 years later, it's worth $200,000. You take the $200,000 and you invest it, and 5 years later, it's worth $400,000. You take the $400,000 invested, 5 years later, it's worth $800,000. Take the $800,000 invested, and 5 years later, it's worth $1.6 million. Invest $1.6 million for 5 more years, it's worth $3.2 million. So if my 25-year-old self had grasped that concept and actually scraped everything that I had together and put that money in and then continued to let it compound, just think how different, it would be when I was in my 50s. I would have a whole, and that's not investing any other way. That's only, getting this one time of thing and letting it compound, letting your money grow. And that's the power, right? That's how Warren Buffett got wealthy. That's how the other people, their money started working for them. And if you can get this compound effect working, but what happens, right? Most people, I'm going to do a house hack. And then they spend the money that the tenant pays, right? It makes no sense, right? And house hacking is a great way for a young person to start, right? So what you should do, though, buy a 4-bedroom house, live in one, rent out 3 bedrooms, pay the mortgage and save the money and buy a duplex next. And then buy a duplex, save the money and buy a 4-plex. Then save the money and buy a 10-plex. You need to be able to think that way. And a lot of people don't think that way. They think, oh, I've got this extra money. Let me go do the things that you cannot save your way to wealth. You can only invest your way to wealth.
Most definitely, most definitely. So kind of unpacking that a little bit further. So how was that transformation that you had to make, not becoming an investor in real estate until age 55? So how was that transformation for you to make that move in your life to kind of come into real estate investing and starting to become an LP, and then now where you are right now as a GP?
So I was fortunate that I had an economic event where the company got bought out by a private equity company and I got some money, right? So that was my windfall, right? I was fortunate that I got that. But I thought to myself, I cannot like do what I've done my whole life. My whole life was I got a raise and I was still in debt. I got a raise, I was still in debt. I got a raise and I was still in debt. I thought, I've got to break that cycle, right? And so I said, okay, I'm going to take a large portion of this money and I'm going to start investing it, right? And then I was a little bit into real estate, just playing, a few investments. And then all of a sudden 2020 happened, right, with COVID. And the stock market went, whoosh. I woke up one morning, I was worth 30% less than when I went to bed, right? And I went, holy moly, this, and it started to, I took a bunch out a little bit and it started to creep back up. And thank goodness some of it crept back up. But, I thought I can't rely on that. See, the interesting thing is, right, all through the pandemic, real estate still appreciated. It's quite interesting. It's one of the things that is, I don't want to call it recession proof because that's a big broad term. And, yes, there was a crash in 2008. This crash, this reset is nothing like that, right? This isn't a bank failure. This is just high interest rates and rapid inflation. So it's a little, but it's always growing over time, right? A lot of people don't realize that 90% of millionaires became so through real estate. Now, did they? I got fortunate, right? I had a good job. I made some money and I invested it in the real estate. And real estate is also the most tax efficient way to grow your wealth, right? Love them or hate them. When Donald Trump said, I pay no taxes, do you know why he pays no taxes? Real estate, because that's where all his money is. So love them or hate them, the government sets up real estate investors to be successful because they need housing. And so they put tax incentives because they want them to spend that.
Yep, no, 100%. And I think when you start looking at commercial real estate and bonus depreciation and the cost segregations, that it just amplifies just the wealth building process, because you get to keep so much more additional capital that you can invest without having to pay taxes. So really, looking at your time with, I think you said 20 deals that you participated in as a limited partner. So for you, as you clearly have you worked with different operators, seen probably some good and bad. So kind of what are the top three metrics or top three items that you have to check off your list before you commit to being an LP in a deal?
Yeah. So first of all, it's getting to know them. So, spending time. And when I say getting to know them, we're not necessarily going to dinner, but I'm following them. So one of my most successful investments, they also did a lot of asset management training. So I actually went to a free course they had, and then I paid for a course. And then anytime I saw they were on a webinar like this, I joined. And then I would ask some questions or I would do things, and then I would follow up. And I'd say, start sending me your deals. And I would watch their webinars. And I would say, okay, I'm not ready to invest right now, but would you mind just sending me the investor reports so I can learn? And a couple of people said no, but these folks said, yeah, we'll share them with you. We'll send you the updates. Please don't share them or anything, because I wanted to see what kind of updates they were giving and how their deals were doing, right? And then I finally invested in them. Okay, so first you want to pick the who, right? So the who is very important. Then, so I call that the jockey. So you're going to bet on a jockey. The next is the horse, and the horse is your asset class. Now I started out in multifamily. Now multifamily has lots of variety of classes, right? So there's everything from A+ to D-, okay? And I've invested in all of the classes now. But I started out mostly as a C value, value add. Okay, so that's very important. But you want to, and then once I got a few, I wanted to diversify, right? So that's why I did a retail investment. And bad news on the retail investment, we closed March 15th, 2020. And so that deal didn't go so good because the whole plaza got shut down during COVID. But then they managed to play it up and they turned out really good. It's not one of my better investments, but it's still been doing positive cash flow distribution to us. It's currently up for sale, so hopefully it's a tough time to buy, but it was stabilized and they wanted to get it up for sale. And then I thought, man, all these hospitals are over and a lot of people are having to go to medical centers. And all of a sudden an investment deal from a medical center came by.
Okay.
And I went, oh, I know these people. I wanted to get involved. So first of all, I got to know the people. Secondly, all of a sudden now an asset class, a horse came by me and I went, okay. And then the last is the track, the market. So this was in Mesquite, Texas, which is a suburb of Dallas. So fast growing, nice community. And so all of those things kind of aligned. And I'll tell you another alignment story. So there was this lady, I got really good friends with her. And in fact, when she went to her daughter's wedding in India, I co-hosted her meetup and did different things. It was a virtual meetup. And and she was sending me deals. And I was like passing on all the deals. And again, what happened? I picked my horse. I wanted to do something investment in the Carolinas.
Okay.
And I wanted to do storage. And what does she send me? A new storage deal in Charlotte, North Carolina. So I'm like, okay, I've already picked the jockey. I researched her partners on her team and asked. I know Charlotte pretty well because my brother lives there, but this was a little bit out. So I got some friends in Charlotte. So I sent them all the address and said, what do you think of putting a new build storage unit here? And it all lined up and I made my investment. So it's very important. And I want to talk a little bit more about the track. Okay, so the track is very important. First of all, it needs to be an area that you understand a little bit about. Okay, so I look for growth states. Okay, so Arizona, Texas, South Carolina, Florida, they're high on my list right now as growth states, right? Everybody's leaving crazy New York and DC, sorry about your luck, California, and coming to these states, right? They're also coming to these states because they're pro-business.
Yep.
And so they make it easier to do business and they're pro-landlord. Now, it doesn't mean they fight for landlords. It just means they're not as restrictive, right? So, and there's still little pockets. So for example, even though Texas is pro-landlord, Austin is probably a more liberal city. Too many Californians moved here. Sorry if anybody on the call is from California, but it's got a little harder to get some evictions done here in Austin than it has where my property I have is in San Antonio. It's much easier to get it. And again, not that I'm like pro, let's throw people out on the streets, but at the end of the day, if you can't pay your rent, something's got to happen, right? Because it's a business. And so you start to try to look for ways that you can align all of these things together. And the track itself is very so it's big, right? So I said the state of Texas, but then you got to go to the city, right? So I'm in the Texas Triangle, right? I'm in Austin. So Dallas, Houston, San Antonio, it's a pretty big triangle and it's pretty hot and it's doing really well. But even in those markets, one side of the highway to the other side of the highway. So like drive around on Google Earth if you can't physically drive to the properties. The wrong side of the tracks, it's the wrong side of the tracks for a reason.
Okay.
Now, it doesn't mean you should never invest there, but it's riskier, right? Because you want to make sure. So you want to make sure you're also in an area with new jobs coming in and that the tenants make enough money within that area. Okay. So a little bit of research you need to do yourself. So if the person tells you we're going to increase rents to $1,000, you want people to make $3,000 a month, right? So you want them to make $36,000 a year. So you can easily Google and find that data on city.com or whatever it is, citydata.com, and you can find that. So now if they tell you we're going to raise the rents to $1,000, but everybody makes $28,000, your business plan is already flawed, right? And 3 times is kind of a good minimum. So you want to be able to have that. And and it's very important. You also want to know when you're looking at the asset, okay, this is all 3-bedroom, 2-bath with kids' playgrounds, but there's no kids living in the neighborhood or there's no good schools, right? So there are times like I invested in the deal here in Austin and everybody said to me, those units are really small. Like they're 530 square feet apartments. And I'm like, yeah, it's single urban professionals that are in a very fast gentrifying area in Austin that work downtown. And this is 12 minutes to downtown. That's perfect, right? The fact that there's, 300 units and 100 of them were small because they got singles and couples and they don't want a big place. They're not cooking dinner every night. They're working and eating out. So you get these things you got to just kind of pay attention to.
For sure, for sure. No, that's great insight that a lot of people, they don't understand the mindset of an investor, especially as you start out. What are those things? What are the questions that you should be asking as you're going through, and what should you be looking for in a deal? So kind of talking through that relationship when you start talking about being an LP, what are some of the negative traits that you've seen for those GPs that haven't been as savvy or haven't been as good? Kind of what are some of those do not do's for GPs out there, aspiring GPs that may be listening, things that they shouldn't be doing?
They're too perfect. Every deal's a good deal. My deal's a good deal. I'm a conservative underwriter. I've heard it all, right? Okay, no, I want to know where you had a deal that struggled and what did you do to make it happen? I was doing a deal and I needed somebody to back me on a deal. And his first question to me was, have you ever lost money in real estate? And I did. Unfortunately, I was a GP on a deal that didn't happen and I lost $75,000 earnest money. Now, I want to make sure we're clear. Passive investors, we'd raised $6 million that all got returned. But us as general partners, we lost a total of 350,000. 75 was mine. And he went, good. And I went, how can that be good? And he said, I want you to know what it's like to lose money, and so that you'll work hard to never lose it again. And we didn't end up winning the deal, but and it turned out he's part of Massive Capital now. I've joined. I didn't even, it wasn't even Massive Capital at the time. They hadn't even started. But just the fact that, and then it was interesting. So we were going to make an offer on a property, and I said, okay, I want to make sure I understand what I need to do, and how much at risk money. And he said, well, listen, you just got out of a loss. We'll cover this one. You cover the next one. And I was like, wow, that's the guy I want to do business with. And I am now. So he's one of the lead guys at Massive Capital. And, so those are the things you learn when you talk to people. And, they did a webinar 2 weeks ago. We lost $100,000. Why are we happy? And they're happy because they avoided doing a bad deal. And, it was, but when people are willing to talk about what went wrong, right? Like people say, right, why do you tell people your deal went bad? I tell people because I want to be honest. I want them to understand, you're investing in a business. Business has risks, but this is the best risk adjusted thing for passive investors. Okay. So when the stock market went down, did Apple computers or Amazon say, well, sorry, but they had no control, right? Like even think about it, right? Russia invaded Ukraine and the stock market went down. It had nothing to do with the stock market. All right. The companies were performing well. So things that happen, but that doesn't happen as much with real estate, right? Real estate tends to keep growing and doing well. It's a very recession resistant place.
Most definitely. No, I definitely appreciate you sharing that piece, because everybody is, during good time, everybody is a skilled operator. As they say, a rising tide raises all ships. Everybody's doing good. But it's like, where do you stand when the rubber meets the road? Or, as being a military guy, that until when the bullet starts flying, that's when you really know who's got your back, who's there with you in the foxhole, in order to get the job done. And that's the thing that I think you understanding how a person responds in bad times will let you know someone's character. It'll let you know what type of grit that they have for their demeanor and being able to execute and still get the job done, because that's who you want to be with.
Yeah, and people that admit they did something wrong are teachable, right? My biggest lessons in life were my mistakes. Okay, when things did good, I didn't learn that much, right? But I certainly learned and I'm talking at work, at life, at everything, right? The things you had to work at and that you fell flat on your face. Mike Tyson says everybody has a plan till you get punched in the face. And I don't want to get punched in the face by him. He's a pretty vicious guy, but you think about it, right? It's everybody has a plan.
No, most definitely they do. So talk a little bit about, we'll pivot to massive capital. So how was it defining and figuring out who you wanted to align with from a partnership perspective when you started looking at becoming on the operator side and being a GP? With how was that process with vetting your partners and kind of figuring out who you were a good fit with or to do business with?
Yeah, so my first GP, I did 2 deals before joining up with Massive Capital. So the first deal, it was some folks that didn't have a presence in Texas, and I was doing broker tours for them. And basically I was saying, listen, I'll go do a broker tour. I will not steal your property. And if we win the property, I'd like to be partners with you guys. We spent a lot of time looking at deals and talking. And so what had happened is they had a deal in Columbia, South Carolina, that they're coaches in a mentoring program, but one of their students had kind of dropped the ball, and they literally were going to lose the deal, and it was a good deal. And so they called me up and said, hey, can you raise and bring a bit of money to this deal and bring some investors to the deal? We need to close. And I did. And so I'm part of the team. So I've been learning a lot. They have a WhatsApp chat that they talk a lot. And then my second deal was with a local operator here in Austin that I kept trying to get on their deals and trying to partner with them. And they also have a property management company. And I would say, can you help me with my underwriting? Can you come and tour this property? In fact, the one I told you we made the offer on, she drove all the way down there, walked the units with me and agreed my plan. And then finally, I kept saying, I'll be the best partner you've ever had. I'll be the best partner you've ever had. And then finally, they invited me to a deal. And then with the Massive guys, I've actually known them for a long time. So one of the partners in Massive was actually a sponsor on my very first passive investment. And then he actually left the space for a while for personal reasons and then came back, but didn't want to take investor money. He was just working with his own money. So he was buying a lot smaller projects, but now he's back. And so they're people I've known for a few years, and I started supporting them. Same thing, I started showing up at their webinars. I started showing up at their meetups. I started talking to them. And then, I just kept offering, hey, could I help with this? Could I help you with that? Could I help you with this? Because again, for you people starting out, if you want to switch to there, don't say, what can you do for me? What can I do for you? Okay, so I would say, can I help you with this? Can I help promote your event? Can I do this? Can I do that? Because I'm super active on social media. And, then we started talking, and then we had a call. And then next thing you know, they said, hey, Trevor, we'd like to talk to you about being part of the team. And this is what we're thinking, what's important to you. And so, I had a value statement that things that were important to me, and said, can you guys agree with this value statement? All right. So again, it's nothing like rocket scientists, right? But it's that as partners, we'll put our investors first. We'll put the employees that are working at the property second. We'll put our tenants third, which sounds kind of like, why are the tenants third? And then we come fourth. We're the last one in the pecking order. Right. So a decision is made. What is best for the investors first? What is a good thing for the team? Because if the team isn't empowered to change your property, it's never going to change your property. So if you get 1 and 2 right, normally number 3, the tenants are taken care of. And at the end of the day, if we take care of those, we get taken care of. But things were important to me, that investors get paid first. We do different things. I got a friend who's in a deal, and he begged them to sell the deal, and they missed the window, right? We have this little window now where interest rates are up, and now they're not cash flowing, and they're not going to be able to sell the deal till the world normalizes. And he was so disappointed. I kept telling them, we need to sell, and why they made that decision, I don't know them well, but the right decision, again, everybody looks back and we're 2020, right? Right. But they had opportunities to get out, and they chose not to.
Awesome. No, I think that's a great perspective with kind of that window with timing, because no one knows interest rates. That who could have told you that interest rates with on the single family style residential would go over 7% in 2022. Nobody could really predict that, had a crystal ball. So, and I think that's one of the things as a multifamily operator that you don't necessarily know where cap rates are going to be, interest rates are going to be on that exit in the future after you go through, you execute a value add strategy. And I think where, looking at the future in 2023, how are you all kind of positioning yourself going in? Are you all still looking at underwriting deals, or are you kind of waiting?
So every time is the right time to buy, but you have to change how you buy and what you buy. So
Okay.
for example, the deal we bought, it was a loan assumption. Okay. So you have to change your business plan. So we bought a loan assumption, right? So when we first got it, interest rates were about 5.5%, and we took a loan assumption at 5.1. And everybody kind of, you're nuts, because there's no interest only left. For those that understand, interest only is really nice because it helps makes cash flow quickly at the very beginning. So we're not in an interest only spot. But now, that same loan would be close to 7.5%, 8%. We're geniuses now. But our plan was made. So it's a locked in rate for 7 more years. So we have a ton of exit options because prepayment penalty will be very minimal in about 3 more years. So we could get out in 3. We told the investors 5. We could get out at 6 before the loan matures if we had to really push it, if the world took a long time to normalize. And we are paying down on the loan. And we all know you don't pay down a lot at the beginning, but so the multiple on our deal is really good. But
Nice.
cash flow is going to be rough for the first 9 months, and then won't really catch up to a prep payment till about 18 months.
Okay.
But we were honest with our investors, right? This is what our deal is going to do. And I'm on a couple of passive deals, and interest rates are really going to hurt them. So they basically suspended any payments, and now they're actually doing a cash call because they have to buy another rate cap. So a rate cap is basically insurance on your mortgage, and theirs is running out. So it's a bad spot to get in, unfortunately. And again, nobody thought it would go this crazy, right?
Right.
Nobody thought and you guys are all young on this call. My first home mortgage was 16% interest. Crazy, 16% interest.
Wow.
That was back when a long time ago. So we got used to abnormal, right? 2, 3, 4% interest rates are not normal. 4, 5, 6% interest rates are normal. The problem is we went all the way from abnormal to abnormal, right? So this big delta swing. And it was all because they just printed too much money. They created this inflationary thing. I'm not an economist, right? But when things are growing as well as they're growing, to keep funneling money into an economy that has such a high demand for jobs and wages and prices and things, you just created a kind of a tailspin. And again, it's probably good I'm not in charge of the economy, but I think they could have done a few things differently. But they've created this thing, and I'm hoping, very much hoping, that 23 we normalize, right? And when I say normalize, that we'll end up somewhere 5, 6% interest rates, inflation. I don't know if they're going to drive it down to 2, but let's hope they stop putting the screws to us once we get at least below 5.
Yeah, no, I agree. That's one of the weird places that we are right now. It's like the Fed has been steadily increasing the interest rate, the federal funds rate, but stock market is fine. It's like they can't break the stock market. They're still rallying. You still have unemployment at historical lows. I think we're still at 3.5% for its unemployment, even with all the tech layoffs. And so I don't know how we get there with the Fed trying to inflict pain on the economy and drive up unemployment, but the inflation is coming down some kind of way, but the pain isn't being realized in the economy right now. We still just had 2.9% GDP for fourth quarter.
And then there's a lot of strange things, right? If you want to talk about strange, talk about Bitcoin, right? So I got to tell you, my son kept bugging me to buy Bitcoin, and I wouldn't. I thought, I can't pay $3,600 for one thing I don't even understand, right? When it went to about 30, 40, 50, 60, I thought I was an idiot. And now I think I'm pretty smart because, you know, I might have got back in, and I call it a joke. So I bought Ethereum though. So I
Okay.
bought Ethereum and I rode the wave up, and I sold when I doubled my money. I still have money in there. And what I tell people is on my 61st birthday, I'm either going out for dinner or a trip around the world. Because it's
I
either
love
going
it.
to be just enough to buy me dinner, or I'm going on a big luxury cruise around the world or whatever, because who knows, right? I mean,
Yeah.
talk about like stuff that makes no sense. You know, that I like to invest in things that I can see, I can understand. There's a business plan that, and you do a good job implementing you buy a right property at the right price, you implement your plan correctly, you will see growth, right? What plan is there to, you know, Bitcoin, right? Buy and pray, right?
Yeah.
And don't get me wrong, a lot of people made a lot of money, and a lot of people lost a lot of money. I got a friend, his sons, they bought it on leverage and they got killed, like
Ooh.
$1 million leverage call. That is painful, very painful, because it doesn't follow what we normally do in business sense, right? Like as much as apartment seems mind-boggling and over blowing your mind, it's not, right? You're buying a business, you're putting improvements into the business. The business is leveraged by debt, which is a really good thing on multifamily, right? Debt leverage, you know, if you read Rich Dad, Poor Dad, and you only learn one thing, well, first of all, your house is a liability, not an asset. That's the big mind blower. Still can't even almost get my mind around that one, but you know, the power of leverage, and then you combine the tax savings on top of all those things, you know, real estate is just so powerful.
It is. It is.
And it
That
can
is
be done at
definitely.
every level, right? We talked about house hacking, you know, so again, don't wait to buy real estate and wait. If anybody learns any lesson, start out, try to figure it out, right? And try a way to not take your profits, but reinvest them. Let your money compound.
100%. Sage advice. I'm gonna open up the floor because I could ask questions all night. For those that tapped in live tonight, any raise your hand or come off mute. Any questions that you all may have
I think
for
Faye's
Mr.
got a
Thompson?
question.
Yeah, yeah, I've been holding it, back, but I like the first of all, it's a great analogy with the plane for being the passive and then the active investor, and also the jockey when
Yeah.
it comes to like knowing the to invest in. It's easy to remember. Now you were talking about the um your journey on it when it comes to like if you're gonna do it again, you wish you've done it earlier, right? So I'm curious to know what actually held you back during the earlier times to why didn't you jump in? Because I know you were already reading the books, and all that. What's the one probably a fear or
Fear,
challenges?
100% fear, 100% fear. Like I, even though I was educating myself, I wasn't educating myself, right? I was still kind of believing the things, and how could, and I would hear people talk about, yeah, well, we own 4 or 5 rental houses and this, and yeah, they had trouble and they had tenants and toilets and trash, but at the end of the day, it was totally fear and mindset, right? And then I'll be honest, just getting a bit of a payday released some of the mindset, right? At least I was like, okay, well, so now that last excuse is 100% gone. And then all of a sudden, after like my third investment, I went, wow, why in the world did it take me so long? And then, and I just started learning, and I became obsessed with it. I mean, I literally was like, just read every book, watched every podcast. I was doing 3 meetups a night, because we were getting into COVID, and I was literally doing 3 meetups a night, like catching an
Wow.
East Coast one, a Central one, and a West Coast one, and it was, I never left my office, it felt like.
what would you advise to someone who's, you know, feeling and going through the same fear of jumping into the game?
Yeah, you know, it's hard because other than you just at some point you just have to go for it, right? And I was just afraid to go for it, right? I'll tell you another story. I'm originally from Canada, and when we moved to the US, I thought I should buy a place, make it an Airbnb, and then it could pay for itself, but we'd have a place to stay when we went back home. So I didn't do it. 12 years later, I looked at the place. So I could have bought it for $300,000. 9 years later, it was worth $900,000.
Wow.
So again, where I came from in real estate went really crazy, like really, you know, Austin's getting that way a bit. But I didn't do it because I was afraid to do it. Like, oh, am I going to manage it? And how, what if it doesn't pay for it? And all of these excuses. And, you know, and I just kept making them. Why didn't I do it? And, you know, and even if it had just broken even all those times, the value is crazy, right?
Like
But I
even
was
if
afraid.
you,
I went, oh, I
yeah,
don't know. I don't really understand it. And how am I going to manage it? And who's going to manage it? And yeah, I just excused myself out of doing it.
is the fear coming from the source of funding or the financial, or is the fear coming from the education or understanding to stepping into the unknown?
The fear is my own limiting beliefs that, oh, I can't do that. I can't do that. And
Mm.
then, you know, I started watching people do it and I'm like, wait a minute, I can do that. Like, that's not as hard as I thought it was. I can do it. And it's this little space between your two ears is the most complicated real estate in the entire world. And just getting over that, right? You know, it's the average guy going to the dance and afraid to ask Faye for a dance. You know, it's like she's probably going to say yes if you know, because she went, you know, you're afraid.
I think Reg has a question.
Yeah, it's just your limiting beliefs. Oh, Reg has a question, I
Thanks,
think.
Trevor.
Hey, how you doing, sir?
I'm doing great. How are you?
Yes, man, you gave so much information away. I'm definitely gonna watch the recording. John, I really appreciate you for having him on, because you know this is something I'm definitely trying to learn as far as asset management. So I have 3 questions. Number 1, how can we get in touch with you? We have any other questions or your social media? Just kind of follow you from there.
Yeah, so LinkedIn is the easiest, Trevor Thompson. So connect with me there. I also have a YouTube channel, Trevor Thompson, and I post a lot of education there. And then I do some meetups that I post there. So like I hate reading. So somebody sent me the top 50 real estate terms. So I made 8 little videos where I narrated it, and just because I you know, tried to make it simple and easier to understand. And I've made videos on this little airplane thing. I got to make the jockey one. So that's where you can reach me. And I'm not very good at it yet, but I am on Instagram. I got to get better at it. I get told I've got to get on there. So I don't post much there.
No, most definitely. I appreciate it. And my second question is, being the fact that I would like to be a better asset manager, what would you suggest to a brand new asset manager that has very little to no money, but they do have the education and on finding deals? What would be probably the top 5 things you think asset manager needs to have?
So real estate is, especially at a bigger level, is a team sport. So you need to hone your skill set. So my skill set, as lame as it is, and how I got on Massive Capital, is I'm an awesome networker. And I mean, how in the world do you think you can get on a team for being an awesome networker, right? That's pretty, don't tell anybody, but I can't underwrite. I really can't underwrite. I can read it, I can critique it. I look at tons of deals. I've been on a show called Shark Pool, which is like Shark Tank, where deals get presented to me. I can do it all, but so find a value and hone your value. So there's a really good book called Best in Class, and it's on my YouTube page. I refer people to it, and it's all about asset management. And then Gary Lipsky was one of the writers. He has a YouTube channel called Break of Day Capital, and he posts a lot of stuff about asset manager. And then his partner, they've split up now. He's joined another Vertical Ventures, it's called, but they offer a lot of training on asset because there's not a lot of training. A lot of people don't train on asset management. It is the most important and going to even be more important now we're in crisis. And I think you had a third question. You're on mute now.
Sorry, yes. Okay, that's awesome. I really appreciate that. So understanding that it's a team sport and finding your skill set, that's awesome. The last question I have, so right now I've been kind of seeing on social media, YouTube, where people kind of having this small little debate by like syndication or funds of funds. What's your take on that? Do you some people saying, well, syndication is like, they really don't like it for their reasons, and some people just say you should start a funds of funds. What is your take on that?
So all of my investments are a syndication. I have never invested in a fund. Doesn't mean no. So through Massive, they're going to start a fund. So I'm about to have to become a believer. But I want to invest in you, your team, your property. And I don't want to be commingled or mixed or not knowing where my money goes. So sometimes funds go to 7 car washes. Well, is there value in that? Absolutely. But I only want to invest in this car wash or that car wash. And so I've never personally done funds, but I've got friends that say, oh, I prefer it that way, or to go into a bigger package deal. I've just never liked that, right? I've liked to know I'm buying this property. I've either walked it, driven it, Googled Earth it, and that's me. Just because I'm a touch and feel guy.
No, that's a great answer. So listen, I really appreciate you. I'll be following your platforms and reaching out to you. So thank you so much for your help and coming out.
Also too on LinkedIn, just say you saw me on the podcast. I'll send you a link. We can book a one-on-one call. To me, so I set myself a goal that 1,000 people become financially free through real estate investing. It's a lot of people. So originally it was 100 people. And then I listened to Grant Cardone and said, man, I got a 10x it. And so again, it doesn't mean that 1,000 people are going to invest with me, but I want to inspire people to not do what I did, not wait, not be fearful. And you got to start where you are, right? So again, a lot of people say, oh, you should only buy 100 units and above. Well, yes, but if you can't, buying, like I said, a single home, a duplex, a quad, sixplex and then get up there. You got to start, and that's more important than anything.
Yes, sir. Thank you so much again.
Thank you. Thanks for showing up.
Any other questions? No,
he looks like a tough guy
in
his shirt there. He looks like Mike Tyson there, That's awesome. And I didn't start out too by saying thanks for your service. I meant to do that right when I got here, and then get me going on real estate. I can't shut up.
Yeah, no problem. No, thank you. No, I definitely appreciate it.
Yeah, and with iFly too, I'm sure but we had a lot of military use the facility. In fact, the wind tunnel on Yuma Proving Ground is one of ours.
Really? Okay.
Yeah.
Yeah, I did not know that. We actually have an iFly down the street from my house.
We're still in Loudon.
Yeah, in Loudon.
Yeah, so I opened that. I love that location. It's a great spot. It's very successful.
Yep, right there by Top Golf. Awesome. Any other questions? No, I just if we'll see if anybody else comes up off of mute. What are you about to say, Faye?
A lot to unpack in this one. I mean,
it was.
If I'm gonna actually watch it, it's bringing not just the real estate piece part of it, but the biggest piece of it is really what's holding you back is just yourself.
Yeah.
It's not the timing, it's not the market, it's not even your resources. It's just you.
Mhm.
Like
That's it.
everything that you need is
Yep.
already there. You
Yeah.
just gotta figure out like, okay,
And
who is the jockey?
yeah,
Who do you want to be? What's the role you wanna be in? Do you want to be the pilot? You want to be the person who's gonna be the passenger on that plane? It's really just us.
yeah. Yeah, I remember I met young man, he actually worked at iFly, and he was house hacking, and he was sleeping on the floor in the basement
Wow.
because he wanted to buy a second house. So he wasn't even taking a bedroom. He was sleeping in a little, like on the floor in the basement so he could rent out. And I was like, you are going to blow
Yep.
my real estate career out of the water. Because he was in his young 20s. Because that's the kind of hustle.
Yeah. No, I made a post today that discipline is the key to success in any facet of your life, whether it's business, relationships, you name it, your physical health, whatever it is. If you have discipline, you can go far. Nothing's gonna stop you but yourself.
Yeah.
Mhm. Easier said than done.
Yeah, it really is. Yeah.
Guilty. Yeah. It's hard to fight,
It is.
the person that's in here.
And it gets harder as you get more set in your ways, right? It
Oh, yeah.
doesn't necessarily become easier, right? I hire a lot of coaches. Okay. So I've got one coach and I call him my brain coach. And it's just like his whole thing is, he says, is just to get me out of my own head. And we talk for an hour a week, and he's like, every time I say something, he says, well, why? Unpack that. Why? Unpack that. Why can't you do that? Why aren't you doing that? Why haven't you done that yet? We talked about this last week. What'd you do all week? And it's like, well, I was busy all week. He says, busy doing what? Were you actually being effective, causing things to happen? And I was like, man, it almost got to where I didn't want to do the calls anymore, but I thought I knew I needed them. And now he says I'm his favorite student. So, but it doesn't mean he still doesn't push me.
Nope, that's what it's all about. That's what it's all about. Pushing and having people that'll push on you, whether it's a coach or accountability partner or somebody in your network on your team. Just got to be able to have somebody in your corner that's going to give you that kick in the butt and like, hey, you need to be doing this and do
take
what you
the
already
time
know
to
you
talk
should
to
be
you,
doing.
right? There's a lot of people that don't take the time to talk to you.
Yep, no,
That's
100%.
true. One last question for me, Trevor. What's your favorite book?
So I'm gonna do On Your Life. I'm a big Grant Cardone. I've mentioned it before, but you got to do it on Audible. You got to listen to 10X on Audible. Then you follow it up with Be Obsessed or Be Average.
Nice.
Okay, because it's kind of the follow-up book, but you got to do it on Audible. Grant's like, love him or hate him. Again, a lot of people don't like him, but that's a powerful book. Then on the real estate side, and these are all on my YouTube channel as well, on the real estate side, it's a book called Passive Investing by a guy named James Kamasamy, and I'm actually in his mentoring program as well. Very successful local Austin syndicator. And it talks all about what you need to know as a passive investor. And then if you want to become an active investor on syndicating, Joe Fairless, best syndication book ever. So everything on Joe Fairless is best, right? Best. And I'm actually going to his conference, best ever conference in March in Salt Lake City. And it's a great conference. And he's got a podcast, the longest running real estate podcast. You can learn a ton, called The Best Ever. But the best ever syndication book is by far one of my favorites. And then there's a bunch of other ones. I think I got about 40 or 50 now up on there where I recommend, and they all have a different purpose, right? So remember, before I talked about ask what you can do for somebody, not what they can do for you. Another great book is The Go-Giver. Okay, I love that book, and it talks about being a go-giver. And Jim Rohn said, if you figure out a way to give people what they want, you'll get what you want. Or
Yep.
something like that. I got to get his quote better. I keep butchering his quote, but you know, very powerful books. And I listen to Audible because I go to a lot of meetups in Texas, and some of them are like 3-hour drive there. So, and everybody says, "What do you drive 3 hours for?" And I said, "Well, I get to finish my book." And you know, so literally, you know, I'll usually do one call, but I try not to do too many calls while I'm driving, and I listen to my books.
No, Trevor,
Nice.
that's phenomenal. I appreciate all the wisdom and knowledge you shared, and tips for the LPs, and you know, insight into, you know, the GPs and what they should be doing as operators too. So
Yeah.
hey, if you ever need anything I can do to add value, definitely I look forward to being of service, and I'll definitely look you up next time I'm in Austin.
Yeah.
Maybe go
yeah.
get some good Texas brisket somewhere.
Yeah, yeah, and if you go to any real estate meetups, you know, I try to attend the big ones anyways. So
Okay. Yeah, I'm thinking about trying to come out in March to Salt Lake City. I'll be in Dallas in
I
April.
think the sale on the tickets ends tonight, though, the reduced price, and it's not cheap. So now you got to decide, am I going to act? And
Yeah, no, I'm gonna definitely look at that one and see.
yeah, I
'Cause
think
I've never been to that one
their
yet.
their price goes up February 1st. You know, they never put discounts out there. Actually, they do. I think there's a discount. You put best ever in the code. I think you can get 15% off too.
Okay. Awesome.
Yeah,
Well,
but it's a
thank you
good
again.
meetup, and you know, and then obviously at some point getting a mentor or mentoring program. There's a lot of them out there that are really good. You know, and you want to make sure that you get into a good community because they'll help you, right? They'll make you accountable.
No, 100%. Community, it can make or break you. It can save you from making a lot of mistakes,
Yeah,
and yeah, and get you where you're trying to go a whole lot faster too.
yeah.
Awesome. Well, thank you again, brother. I
my
appreciate your
pleasure.
time and sharing with us. And until next time.
Awesome.
Thanks,
Anytime, I'm
Trevor.
happy to come back. And thanks for hunting me down and getting me booked.
Appreciate you, Trevor. Yep,
All
I'll talk to
right.
you
Take
soon.
care.
Have a
Thank you.
great one,
Bye-bye.
guys.
All right. Have a
See you
good night,
next
everyone.
week.